Hey guys, John Polemy here. Actionable Intelligence Alert. This is the weekly market update for 2/8/20, February 8th, 2020. And I want to jump right into the reality check where we're going to talk about coronavirus some more. Why? Because it's dominating the news and we need to pay attention to it. We're seeing continued discussion and evidence coming out of China that this is having disastrous effects to the economy. I've seen anywhere from 200 to 400 million people are basically told to stay home in their apartments. It's a third of the population. The virus continues to spread, and this is definitely going to have economic repercussions. I mean, it's the second largest economy in the world. It's literally being shut down over this virus. This will and is currently having a spillover effect on the rest of the world. We've already seen supply chains being interrupted. I believe I saw Hyundai in South Korea said they had to shut some production down because some of their part suppliers in China weren't able to meet their needs. This is going to further be exacerbated in demand for commodities, specifically oil, copper, coal, things like this, iron ore. China being one of the largest importers and users of these raw materials. They are the 800-pound gorilla when it comes to oil and copper importing. So we don't really know what the impact's going to be. It's not knowable right now. It's an unknowable. It's a knowable unknowable. I mean, it sounds stupid, I know, but we're just basically speculating right now. We're taking in information and looking at things and trying to figure out what's going on. There's some discussion that the information coming out of China is not accurate because of the cultural things around saving face and some other things. Just the fact that the Communist Party kind of reminds me of Chernobyl. The Soviets weren't very forthcoming at first, but as the disaster in Chernobyl eventually could not be contained, the communists had no choice but to be more forthcoming. So I suspect the same thing's going to happen here. We've heard all kinds of wild stories that 1 million people have already died and all these other things. It's basically a coronavirus. Are known viruses. We know what they are, even though this is a new one. It has flu-like symptoms. It appears to be virulent, more highly able to spread than typical influenza. We are in the cold and flu season already, so I would not doubt if we've had people that had the flu with a rhinovirus and then contracted this and it overwhelmed their system and they died. So there's all kinds of things going on here. Now, the one thing I will point out, let me just finish the slide. I expect continued deterioration in commodity markets and eventually stock markets. I mean, I don't see how the United States, I know there's a lot of money printing going on, but I just don't see how, this isn't going to have an effect because of the first and second quarter of this year. And I'm going to get into why I think it's going to peter out the second quarter. Like I said, I'm not really sure how the U.S. is trading at near all-time highs when the risk of impact to the U.S. economy is certainly unknown at this time. So there's a lot of money printing going on. That's why we have levitated stock prices. That's one reason. But I want to get into this a little bit. I'm on the sidelines building cash. A lot of my positions are underwater because of this. We were recovering late in Q4 of last year into the first quarter. This thing hit, and it's just basically taken the legs out from under a lot of our trades. The thesis I had was because of the tremendous amount of monetary creation going on, not just in the United States, but over the entire world, was going to cause a lift in nominal GDP, and that was going to affect commodity prices and thereby stimulating a lot of the positions that we're in to move higher. I mean, our shipping stocks have just been decimated. There's just no doubt about it. If trade slows down, that's what's going to happen. However, let's be a little bit realistic. If you go, there's several good YouTube videos you can check out, but if you look at how a virus actually operates, how it's transmitted, how they really work, like I'm mostly focusing on like influenza and corona type viruses. They have this, think of it like an M&M. So it gets out, somebody sneezes, this thing comes out, and the virus's constituents are inside of this ball, if you will, that's basically surrounded by a lipid fats type gel that protects it and keeps it together. Now, when the people, this kind of fades into what I think is going to happen. When it's cold and it's winter time, when the temperature drops sufficiently, say down to 40 degrees, I think is what I read, 40, 50 degrees, something like this, that lipid fat covering around it, that gel, hardens or semi-hardens or becomes rubbery. That allows the virus to exist outside the body of the host as it's transmitted, but it's only lasts for a certain amount of time, because as the temperature rises outside the body, like say 60 or 70 degrees, I can't remember, but suffice to say, depending on the virus, that gel liquefies. That's why the M&M analogy I think is most accurate. If you put an M&M in your mouth, the hard candy-coated shell eventually melts away, and then the constituents, softer constituents of the M&M, very quickly will dissolve on your tongue. So that's why you see the flu and cold season being in the wintertime, because the ability of the virus to be transmitted and to live outside the host for an extended amount of time and thereby get picked up by a new host or infect a new host is lengthened because of this temperature and the coating around the virus that semi-hardens and allows it to exist. So when you get into the spring and summer, yes, people still get sick, but it's not as prevalent. Why? Because this things just cannot exist very long outside of the host, and the ability, the transmission vector is short-circuited. So I don't know. I mean, what I looked at was mostly around influenza, which is regular flu, which, you know, tens of thousands of people die of every year here in the United States, and hundreds of thousands die around the world. And I think something similar. This thing, once we get into the warmer periods of the spring, when it starts warming up, we should see, hopefully, this disease will burn itself out to a certain extent. We'll see it crest and implode. That's what I'm looking for. That will be, to my mind, a buying opportunity. I'm going to explain why coming up in the next slide. But that's what that's what I'm looking towards. That's the most, what I can think of as science-based, what's going to happen. But we don't know for sure, right? So that's what I'm looking for. You can follow the progression of the virus on the type in Google John Hopkins coronavirus, and you will be taken to a site where they track this in real time. So we're looking at progression. Is the incidence of new cases slowing down and then it reaches a crest and tips over? I think that will be the time when you would want to go long on some of these ideas. And now I'm going to explain why. So we've already seen the response in China, and I'm going to get into some more here, which I think is interesting, as second-order thinking, if you will. The response to this virus's economic impact, to my mind, will be massive stimulus, both monetary and physical, especially in China. I mean, this is going to have a big impact on the economy. I mean, you virtually have trade stopping, and you've already had China rejecting LNG loads that they've contracted for. We've seen little tidbits of information here and there. The global supply chain being affected. We just don't know the stake of this. Now, we already are in an environment where the majority of the central banks around the world have easy money policies. So we established that as the baseline. We've already seen China inject hundreds of billions of dollars already into their system. When the Chinese market opened the other day after the Chinese New Year, stock market dropped 9%. The Chinese government was in there buying. I'm not saying this is all good or economically sound. I'm just telling you what I think is going to happen. I'm not endorsing the policy. So Kevin Muir, who I've talked about before last week on the Macro Tourist Show, he does a lot of macro level things. I kind of like, he's been talking about governments around the world having, with monetary policy not really working, that they're going to have to shift to fiscal policy. But this last coronavirus thing, I think, may be the catalyst to kick a lot of this off. It will be the excuse that governments can use to do what they want to do anyways, which is spend a bunch of money on infrastructure and really run the printing presses. So a couple quotes from an article which I will attach to this video. Kevin says I'm just going to quote one of the couple paragraphs here. This is an actual real-life emergency. There will be no limits to what governments spend or central banks print. I think this monetary stimulus is just the start. It will be followed by physical, and then more monetary, and even more physical. And I agree with that. This is what, I mean, he puts out in the article, he's already shown where Germany already is, being the tightwads that they are already floating the idea of physical stimulus. We've seen the same thing in some other countries already happen. It's going to happen around the world. If Trump gets elected and he can get a compliant House and they hold the Senate, I expect a tremendously huge infrastructure package that he wants to do anyways. He's a builder. He wants to repair all the bridges and stuff. He wants that to be his legacy, part of his legacy. I think money will be spent in the trillions if that happens, if he gets reelected. And the Chinese, this is another comment that was made, and I knew about this, and I thought, when was this going to kick in? Because this next paragraph is very important as far as the Chinese are concerned. The centenary of that's the 100-year anniversary of the founding of the Communist Party of China is in 2021. That's next year. At which point a full, I can't pronounce this word, Zhaokang society would have been achieved. This is the goal, the Chinese Communist Party. This is the compact they made with the people. You give us political power and autonomy. You don't challenge us politically, and we will give you these economic benefits. And the economic benefits is roughly meaning Zhaokang, or however you pronounce this, roughly meaning moderately well off, is a relatively abstract theory rooted in both Confucianism and socialist ideology. The party has outlined this in objective quantitative terms, a doubling of the 2010 per capita income figures. Now, they just had a giant monkey wrench, the Chinese that is, thrown into this plan in the last several months with this coronavirus, and basically their economy shut down. If you want to have 2021 be how embarrassing would it be for Xi Jinping, who's basically set himself up as an autocratic ruler of China, strong man, if you will, to go into 2021 and not achieve the goals on the 100th anniversary of the CCP. Think about it. This is now, we're getting into second level thinking now, guys. So in order for stimulus, both physical or monetary, to have an effect, it has to be done a year in advance. What do you think is going to happen? It's already started. This thing hopefully burns itself out in the spring, and then there's probably be a recovery. What is the Chinese Communist Party going to do? What level of money printing? What level of bridges to nowhere? What level of high-speed trains being built? I mean, who knows? But I think that what will be done by this particular government, and to a certain extent other governments around the world, is something they want to do anyways, and this coronavirus will give them the excuse. That's my view. I'm going to do some more investigation into this whole plan. I mean, I'm not Chinese. I don't understand the mindset. I lived in Japan for 3 years, but I don't understand fully the Asians face saving, how important that is, and not wanting to be embarrassed. I did have a lot of dealings with Japanese companies, and they are very, I'm not sure if it's the same in China, but they're very wary of offending or being offended. So you have to be very careful, and you have to be understanding, like the Japanese, for example. They will, if you're a customer, they will never tell you no, they can't do something, or they're not. I mean, if you're here in the U.S., you can get into some table flipping arguments over contracts if you're trying to do something. Those people just tell you, hey, we ain't doing that, and they'll get up and walk out of the room. Japanese won't do that. They will just, you'll see like the leader just sit there, he'll kind of close his eyes for a while, and you'll be waiting for an answer, and he'll just open his eyes and look at you and say, well, that would be very difficult for us to do. And that's, kind of your cue to understand they can't do that. They're not going to do that. So they don't want to shame you. They don't want to embarrass you. They don't want to embarrass themselves. So I think this is very important, what's getting ready to happen next year for the Communist Party, for Xi Jinping himself, who has now set himself up as the autocratic strongman ruler. He cannot afford to be embarrassed. This coronavirus has thrown a monkey wrench into the whole works of what they were planning. And so I think when we come out of this thing in the spring, if we do, that's assuming we do, and the virus burns itself out like a lot of flu viruses do, I think you're going to see a tremendous amount of unbelievable physical and monetary stimulus. Now you couple this with the fact that commodities are trading at an all-time low relative to equities. I think this is kind of setting up. This may be the catalyst, the impetus for the move that we have been forecasting. I mean, we were recovering anyways. We were coming back. We were making the turn, in my view, which I think is going to be a 10-year deal. But this thing kind of short-circuited. So I'm accumulating dry powder. I'm sitting on the sidelines right now because I think things could get a little bit worse as we go through this flu season and this coronavirus keeps expanding and further damages the Chinese economy and world economy. But I think I said the response is going to be a what's bigger than a tsunami or tidal wave? I don't know. Times 2 or 3, who knows? That's my expectation. So, got this off Eric Nuttall's Twitter feed. I'm a big fan of his. This is from Scotiabank. Now, it's from an analyst, so you have to take everything from a grain of salt. But I did see on here, and I'll put a link to this tweet, but this was a note, fuel for thought, coronavirus, the end of times, or simply mass hysteria. I think it's somewhere in between. This is not like the flu. I mean, a lot of people die from the flu every year, and people are dying from coronavirus. And because it's new and the media got a hold of it, I've talked about this last week, how the media hypes things up, but we don't know the full extent. We think that, 2% fatality rate is way higher than influenza, but this isn't the Spanish flu either. And there was a good reference put on here, which I started to read, and you may want to look at yourselves, a paper that was written by somebody at Johns Hopkins. It's talking about epidemic hysterias in the past. Somebody did a study on this. And so, the bottom line that the Scotia analyst says is the number of cases of coronavirus may continue to increase in the near term, but the impact of the market is likely overdone, and we're currently near a bottom. I don't know how close to a bottom we are. That's why I'm holding back, but I thought this was an interesting take on it because I do believe in mass hysteria and herd behavior. We saw this the last couple of weeks with Tesla. I mean, this thing was cracking $900 a share. So it works on the upside and the downside. As the days go by, information will start to solidify, and we will start to get a better handle on what's really going on here. And the market will digest this, and at some point we will hit a bottom. And then we will, like I said, I believe we will see tremendous amount of physical and monetary stimulus to recover from this because we don't know the full effects yet. It's still trickling out economically of who's being affected, supply chains. I mean, when you lock down, there's no flights going in and out of China. I mean, this is going to have an effect on oil demand. So, these in shipping, these things are very precarious markets. Just a percentage or 1 or 2% on undersupply or oversupply can drastically affect the price of a commodity or shipping rates, for example. So something to look at, something to think about, but I do agree with the forecast that it's going to peak in the spring, and then as all viruses kind of die out, or cold viruses, flu viruses kind of die out, they just can't withstand the temperatures outside the body. And like I said, go look on YouTube. It explains how a virus infects cells, talks about, I read some more articles about just like how a virus survives outside the body. I don't know coronavirus in particular, but the influenza virus, that's why it burns itself out pretty much in the springtime. You will note there's not a tremendous amount of cases or blowing up in South America or Australia as there is in the northern hemisphere because they're in their summer months right now. So that's a direct result. Maybe not as many people traveling there. That's part of it, but there are cases in countries there. But I don't think it's going to blow up like it is right now in the northern hemisphere, which is in winter. Wanted to bring this chart up again because we're talking about it. Commodities are historically undervalued relative to stocks. Will this coronavirus, will the response to it, will the change in mindset of governments from monetary to fiscal policy and a combination of both, will it lead to a turnaround and a run in commodities and which are extremely historically undervalued? That's my view. The timing, of course, is important. So let's talk about Cameco's Q4 2019 earnings call. Wow, pretty good stuff. really, and to my mind, the most optimistic that Geitzel has been in a long time. I mean, he was cautiously optimistic. Now he's kind of really optimistic, I think, is what he said. But let's go through here and talk about a couple of the things that he said in his prepared remarks. He said that I think it's important. It's an important reminder because as I read analyst and trade reports and watch the resulting day-to-day volatility, I fear people are losing sight of the very positive long-term fundamentals for our industry as they are caught up in the short-term noise. That's exactly my thoughts that have been for like the last year. I know what the fundamentals are. It's a lot of mental backflips in people's minds and just trying to, rub their hands together. Uh, one of the things that Malcolm Rawlinson said on our discussion we had is, he talked a lot, especially at the end of the interview, about patience. You got to have the patience. The fundamentals are in place. It's just a matter of time. And that's basically what Geitzel is saying here. He goes on to say, and we've said this before too, so is Marcelo Lopez and other people, the fundamentals are really quite simple. Demand is on an upswing and utilities have a growing wedge of uncovered requirements, precisely at the same time that supply is on a downswing, and today's prices are insufficient to reverse the trend. I mean, this is the setup, guys. We've said it before, ad nauseum. Goes on to say our operational decision to reduce production well below our committed delivery volumes requires us to be active on the demand side. In other words, we have to purchase material in the spot market. So there was a lot of stuff in the Twitterverse about, well, how much are they going to buy? How much? I don't get into that. They've drawn down their inventories. They've shut mines. They're going to be opportunistic. I've said that before. They've said that before. They're going to be opportunistic. They're going to do what's right for them in the market to maximize their profit potential. That's what we want them to do. That's what they're going to do. Goes on to say, today we believe the market is failing to send the appropriate price signals. That's correct. At current prices of spot and even some of the term pricing that's happened, these prices are not sufficient to get people to bring new capital, to risk capital in developing and building new uranium mines. It's not happening. It's not going to happen for a while until the price gets up. Geitzel goes on to say, as a result, we've seen a substantial loss in productive capacity that's not being replaced. Exactly, bingo. We've seen the deferral of substantial productive capacity, and we've seen significant destocking. That's right. This is what I thought was interesting, which Alkins talked about too, but I liked that Geitzel reiterated. In fact, UxC's latest analysis shows that most utilities are at or below desired inventory levels. So, commentary on this. What is the prime directive of fuel buyer for nuclear facilities? To make sure that he does not run out of nuclear fuel for that reactor. Not going to have a $2, $4, $6 billion investment sit there idle because you don't have enough fuel. And so if it's in fact correct that most utilities are at or below desired inventory levels, they have to come to market. They have to come to market. They have to start negotiating. And so going on, it says, and if it doesn't make sense to restart existing production capacity, it certainly isn't rational to invest in new greenfield capacity, which means those projects are pushed out even further. We've talked about this before. I think this is going to get compounded by the whole ESG thing. Once we get into the contracting cycle, once the utilities are coming back and prices are moving higher, are you actually going to be able to build some of these uranium mines? Look at Canada, what's going on there right now with oil sands, with pipelines, with development of natural gas pipelines to the coast for LNG facilities. I mean, is NextGen and Fission going to actually be able to build their uranium mines at some point? Is it going to even be allowed? I mean, these are questions, these are things that have to be brought into the equation. The Trump administration lifted some rules on developing uranium mines, I think out in Wyoming or something like this. But, the swing towards, let's take it back to Hobbit times and scratch a living out of the dirt is gaining acceptance around the younger people in the world. And these these democracies in the West, people vote. So I think that this is going to help exacerbate the run in uranium that we're going to have, because it's going to be increasingly, it takes a long enough time already, up to 10 years or longer, to bring a mine through the permitting process, build it, and bring it online. That's going to be possibly exacerbated and extended due to this new ESG movement. And who's going to finance these things, especially if, people are divesting themselves of coal and oil investments? I mean, nuclear is really bad to these people. It's like a nuclear bomb, right? Or we're all going to be poisoned by the waste and all that kind of nonsense. So it's something to take into account as this bull market develops. And here's the coup de grace, if you will, the what I think is one of the most important things that he said here, which is what I agree with, and I've talked with Uranium Insider about and Malcolm about. As a result, there is a greater likelihood that the uranium price will go well beyond what's required to incentivize tier 1 production to return to the market, and inventories will become less mobile. That's exactly what I think is going to happen. I think that the move, because of the extended nature of this down cycle, the move on the upside is going to overshoot. And I think that's, a lot of people don't want to say that because it sounds like hyperbole, or you're trying to sell newsletter subscriptions. But if you look at the facts and you look at the timing that it takes, if you look at the lack of investment, every day that goes by, we're burning up fuel in these reactors. It's not being replaced. And the time frame to replace it is long. So very good comments. A lot of it's getting parsed on Twitter. I just like to keep it simple. You can read the management discussion and analysis in their submittals financials. I suggest you do that because they talk a little bit more about what's going on in the spot market. But suffice to say that I think this market's turned. I just don't think that we have the price signals yet. I think that contracts are being signed at higher levels. And I think as we move through 2020, this may be the inflection point of the year. I actually think that, regardless of the other things that we're talking about in the commodity markets, the two things that I'm still excited about are uranium and gold. Gold obviously is in a bull market, and I think uranium now is in a stealth bull market, and we just don't know because reported pricing has not confirmed that. And I think with the conversion pricing and some of the other things we're seeing in the market, supply chain, it's indicative of eventually the uranium price moving higher. So I read this week, and somebody asked me about it, and I said I would comment on it. This is very interesting. I thought this was great. This was on a Vox article. Vox is a left-wing whatever, because this all roads lead to renewable energy. So this is where this is going. But I thought these comments were excellent, or this paper. It's 510 pages. I'll put a link to it. But it's a report put out by the government of Finland warning on oil and oil supply and what's going to happen, the geological certainty of what's going to happen over the next years. And I want to read a couple comments from the abstract. I encourage you to read this. I'm going to spend some time reading this too. It's 510 pages, chock full of a lot of information, but these are some comments from the abstract. Said today, approximately 90% of the supply chain of all industrially manufactured products depend on the availability of oil-derived products or oil-derived services. Well, that's interesting, isn't it? Half the contents of a barrel of oil are used for transportation. The other half are used for various manufactured goods that you take for granted. You and I both take for granted. Said approximately 70% of our daily oil supply comes from oil fields discovered prior to 1970. Think about that. 70% of that's 70 million barrels a day, comes from oil fields discovered prior to 1970. That's 50 years ago. You're talking about Gawar and some of these large fields, that are probably in decline. Most of the global oil supply still comes from 10 to 20 huge oil fields. That shows you the precarious nature of the oil market. Peak oil discovery was in 1962. Since then, rates of resource discovery has been declining persistently. Oh yes, we've been talking about this also. We use 36 billion barrels at current consumption, 36 billion barrels of oil a year. And last year, I think we only found 4 5, 6 billion barrels of oil to replace the 36 billion we used. Not good. So we are living on the work and the fruits of investments that were made 30, 40, 50 years ago. And as I have said before, what is oil? It's an extractive industry. Every barrel you pump out, you have to replace, or at some point you go out of business. It's not indefinite. You don't just put an oil well up and it lasts forever, pumping 100 barrels a day forever. They go through defined decline rate methodologies, as was discovered by King Hubbert at Shale Oil back in the 50s and 60s. You can look it up. It was a big thing during the peak oil scare about 10 years ago. Peak oil was a big thing. They talked about King Hubbert and his decline curves that he discovered and how they work on a well oil field and nationwide basis, which they do. And, with the shale revolution, everybody threw all that, what we knew, out the window because it's a new era now. Drill, baby, drill. I thought this was pretty good too, or scary. Of existing world liquids production, 81% is already in decline. So you have oil fields that we're relying on, 10 to 20 huge oil fields that were discovered 30, 40, 50 years ago, and 81% of that is in decline. Okay? By 2040, this means the world could need to replace over 4 times the current crude oil output of Saudi Arabia. That's greater than 40 million barrels a day of production just to keep output consistently flat. But we know that demand is constantly growing at 1 to 1.5 to 2% a year. As the world industrializes, as it urbanizes, demand is increasing for oil. It's not staying stagnant. And we're relying on old, worn out oil fields that 81% of them are in decline. This is your wake-up call. This is the key point to the thesis of why I'm so bullish on oil. Since 2008, the shale revolution has increased global oil supply, which stabilized increased demand. This was achieved with the application of precision horizontal drilling applied to the existing hydraulic fracking industry. U.S. tight oil produced in August 2019 was 7 million barrels per day, approximately 8% of global supply. The U.S. tight oil sector accounted, and this is the key statement, for 98% of global oil production growth in 2018. Future global oil demand growth is now dependent on the U.S. tight oil sector. But we know, and I'm going to attach Goring and Rosenzweig's Q4 commodity report, in which they've done the work with AI and artificial intelligence and the work they've done in the tight oil. Tight oil's in decline now. Can't cash flow positive, can't make a profit, and the world's going to rely on shale oil. That's what the government of Finland is saying. That's the report to the government of Finland by these researchers or these people. So if shale oil is not going to be the savior, what's going to happen to the oil price? If demand continues to increase, but supply is not able to keep up, we are going to have a price reaction higher. And I think it's going to be significant over the next, now I think it had already started with all the cheap money and things like that. The shale bubble had burst and people aren't acknowledging it. A lot of IEA, EIA, Rystad, they're not really paying attention. So I think you should read the Rosenzweig paper, which I'm going to attach to the video, and you will be shocked. I think that we get through this coronavirus, and I think you don't get used to these cheap oil prices, because a year, 2 years from now, I suspect they're going to be substantially higher. This is what's really frightening and scary. And I've said this before. I pointed this out even 10 years ago when I was doing spreadsheet exercises. if the whole world was to become as developed as the 2018 German economy in context of oil consumption, that means if everybody else's oil consumption came up to the level of Germany's, which by the way is substantially lower than the US's, the global oil consumption of, let's say, 100 million barrels per day would have to expand by 117%, and an extra 116 million barrels per day of oil would need to be brought to market. Think about that. Does anybody listening to this video think that oil production is going to get up to 216 million barrels per day? I don't see it happening. You cannot have infinite growth on a finite planet. That's what Chris Martenson says at Peak Prosperity. I'm not a doom and gloomer. I don't know what's going to happen. I don't know how much oil we can actually extract, if we're going to have to go to coal to liquids or what we're going to do. But I would suggest to you that the oil price is going to go tremendously higher over time. Because as I've said before, you can solve the transportation issues. People can be more living in cities. You can do mass transit. You can do these things. You can cut down on the use of petroleum for the delivering of goods with trains and things like this. But half the contents of a barrel of oil go for all kinds of other products. So oil, just to say you're going to snap your fingers and it's going to go away in 5 or 10 years, is stupid. Now I don't know how much oil is left, but I know that the Russians are exploring in the Arctic. People are exploring in deep water Gulf of Mexico. These are not easy places to operate, and they're very expensive. They wouldn't be out there doing it if there were easily available onshore oil reserves. So bottom line is that I think if we get through this coronavirus and we get the recovery that I think we're going to get based on the fiscal and monetary stimulus, oh man, we are going to have a tremendous snapback. And it's now become apparent that the shale oil revolution is over. The bubble has burst. The ability to get new capital to just drill for the sake of drilling is over. Company after company has stated that they have to restructure and they have to focus on cash flow and live within their cash flows because they simply do not have the ability to get new investors to give them money. The Ponzi has ended. So we've talked about it. It's been a long time coming. I think long-lived resources that are in politically stable areas. Wink, wink. The oil sands. Wink, wink. Okay, these are being ignored. They're extremely cheap. I think they're going to have tremendous value over the next decade. So these things went on for a while. This is one of my longer videos, but there was a lot to talk about this week. Yes, we're down. We're down in the newsletter. We're getting creamed on a lot of our positions because of what's happening with the coronavirus. But we were on recovery in Q4. I think our thesis was intact. I think we've explained why we think we're going to come back. Maybe it's just me. The criticism could be, and I'd be welcome for this challenge. Maybe I'm just seeking out information that bolsters my, confirmation bias. But I think that we have a pretty good feel for what's going on here, and we'll have to just see how it plays out. Like I said, I'm sitting on the sidelines, accumulating cash, and I have my names I want to go back to work with once this thing crests, because I think, like I said, the response is going to be tremendous, especially in China. So that's it for this week, guys. Appreciate the support. People continue to subscribe to the video. That helps us out. Liking the videos helps us out. Enjoying the comments. If I don't get back to you all the time, a lot of people email me. It's not because I read all the emails. Sometimes I just can't get back to everyone because I'm extremely busy. But, I do read everything, and I do respond, and I try to stay active in the comments. So let's keep that going. Appreciate the support, and stay safe out there. Wash your hands, and hope that this thing doesn't make it over here to the U.S. and get us all buggered up. Talk to you next week, guys.